Hey guys, good afternoon. So we made it through the Fed minutes, um, and the market held on our daily 3 point range. So it came down really, really close. I'm sorry, to the daily 3 point range. 64.25 and 71.50. So if we open this up and go from high to low, you can see here that it is 68 points. So right there, 71.50 to 64.25. And then more importantly, so it fell right within the PT3 range from high to low. And then when you measure the PT3 range from our proprietary calcs, from the mean going out, you can see that it reversed. And also, importantly, this 75-25 range from top to bottom in the options um, i- is 1.5 standard deviations. And 1.5 standard deviations today, using the Black-Scholes model, gave us a implied volatility of 12.3. And if you look here on our pricing sheet, you can see at 64.20 and 63.70 came in at that level on our settlement calcs, Black-Scholes calcs on settlement. And sure enough, that is right where the inflections occurred. So it all lined up today. Black-Scholes works, Jats PT3 works, and the two, when they are in alignment, really showed where those inflections are. And the daily one was on top, controlling price, and the daily three on the bottom. So it was just a really nice textbook bell curve today. Very normal distribution. And everybody was loving this volatility, especially this morning. People were telling me that they had a lot of success with their strategies this morning. A lot of people are happy today after all that terrible consolidation for the prior two sessions. So, had a good report today for the volatility, and the R vol is elevated now over the H vol. So, hopefully, we'll get a follow through day on the volatility tomorrow, and enjoy the last couple of days. The max pain goes back to 15 next week. So this little elevated brief interim period of volatility is brief at the current time, as the market is pricing in lower volatility going back to next week. So enjoy the ups and downs while we have them, and you know learn to navigate between the R vol, H vol, and IV, because it really is a match between all three of them. And when you're laying your implied volatility levels, when we can match them to the R vol and H vol levels, that is where the magic comes in. On the SPX, you could see that it came down to the daily three and did the dip. And this dip right here, where it fell below the daily three, that's when it went to the ES daily three right here. So this little dip was so that the ES could hit its daily three level and turn around. So it goes from daily three SPX to daily three ES. That variance between the two. And then, like I said, they were buying that range, the market makers know where to come in. You don't have to give them an invitation. They know what to do. Unless the range breaks. Obviously, you can extend standard deviation to 1.5 to 2. So, but 1.5 is a very standard level. So we always, want to use the 1.5, 1.5, and 2 for the implied volatility, and the 1, 2, 3 for the Jats PT variance volatility. And I think between those, we'll have a very good framework, a very solid framework to work in. You can see here on the S&P 500 that the daily 2 went from the 3 back up to the 1s, came back to the 2, and then rallied up to the close. So back to that means to the open. Pardon me, that's pink is open. But the NQ is the laggard. It only got back to its daily 1. So we have more of a chance for some more downside volatility on the NQ compared to the S&P 500 and the ES. So that's interesting. Um, Crude kind of flattened out, didn't do much. Gold, likewise, hugging its um, monthly 1, weekly 1 bounce. It kind of looks like a bull flag, doesn't it? Ran out of time. And then the Bitcoin, pretty flat, right in the middle of its daily range. So we're making progress. I'm not happy with today's report for the VSNAV, so I've got to take a look at some of my calcs that are being run on that and make sure the right calcs are being applied. Um, and then again, like I said, I'm going to be introducing this 1, 1.5, and 2 implied volatility standard deviations as a metric to check to see if it's Jets PT level is in alignment, within a few points of that, and try to use those as support resistance levels whenever possible. I think that's going to help. And especially if it's inside, our risk line, if it falls within inside the daily H vol R vol 3 to 3, look for anything within that variance, that difference. See if that can help improve things for us. All right, so that's about it. Making progress. Hopefully I'll get to the point where I can generate all the reports again quickly, get my system down, um, and get this back on track. Very, very close to getting it back up and running. I would like to get all the reports out in the morning. If I can just stay focused and not deviate. I was also building that other VAR report, and I do like both. I do like the VAR report with the Halo. So maybe I'll just try to get Halo on NQ and ES and the VAR reports on all the rest of them. I just want to get all the markets done I didn't get crude done today or gold, so I kind of get worried when I do things like that. It ran out of time today. All right, so I'll get my process down a little bit enhanced and get out some reports tomorrow. But this is looking great. I'm really excited about tomorrow. See what we can do with it. All right. Talk to y'all later. Have a good night.